Good afternoon. Thank you everyone for coming today. My name is Ruth Porter and I'm the head of the Economics and Social Policy Unit here at Policy Exchange. The topic of today's discussion is global growth, challenge or opportunity for the UK. And we're grateful to Kantar who are sponsoring today's event. So much of the discussion since the recession has focused on short-term issues. And what we wanted to do today is really to take a step back from that and begin to look a bit more at the long term. Our economics work programme over the next year will look at how to build a strong economy where the many benefit from growth, not just the few. And over the course of this discussion, our panellists will give something of the global context for this. They'll be assessing the size and the nature of the challenges that we here in the UK face. And they'll be looking at options to boost rather than to damage our long-term growth potential. Our four speakers are Quasi Kwarteng, MP for Spelthorne and convener of the Free Enterprise Group of MPs. Quasi has a PhD in British history and he worked as a company analyst for several years before going into Parliament. He's also the author of several fabulous books, including Ghosts of Empire, After the Coalition and Rule Britannia. Wayne Levings is president of Kantar, which is one of the world's largest insight, information and consultancy groups. It's got over 28,000 employees working across 100 different countries. Previously, Wayne was the global CEO of Kantar Retail, where he oversaw its formation. Before that, he was the CEO of MV1 and has held board roles at Glendenning Management Consultants. Brian Holliday is also on our panel. Brian joined Siemens more than 20 years ago and today is Divisional Director for Industry Automation. He's a chartered engineer and a fellow of the Institute of Engineering and Technology. Brian's also a board member for the Siemens Industry Software Group and a director for the Black Country University Technical College. Our final panellist is Andrew Sentence. Andrew is Senior Economic Advisor to PwC. Prior to that, he was a member of the Bank of England's Monetary Policy Committee, and before that, he worked for British Airways for nearly 9 years as their chief economist and head of environmental affairs. Andrew's most recent publication looks at rediscovering growth after the crisis, and he sets out there his current views on the prospects for the UK and other Western economies in the aftermath of the financial crisis. So our panellists come from quite a wide range of backgrounds and will be able to give us a great overview of the topic. So they're all going to speak for about 10 minutes each, and then we'll have time for questions and answers at the end.
Thank you very much, Ruth. Clearly, I'm very pleased to see you settling into your new job. We worked very well, Ruth and I, when she was at the IEA. And I'm very pleased, obviously, to come here this morning and talk about global growth, challenge or opportunity for the UK. Now, the question is challenge or opportunity. And those of you who are particularly astute will know that it can be both. Both could be right. It is a challenge, absolutely, but it's also an opportunity. So there's no mutual exclusivity between challenge and opportunity. And I wanted to say my remarks would be split really in three sections. I mean, clearly there's the global growth picture in terms of the macro challenges that all Western countries face. It's not just a British challenge. The second thing I wanted to talk about was the uniquely British nature of our problems, or problems which I think affect us, as well as a number of other countries, but they affect us in particular. And thirdly, I just wanted to talk about some things that we could do or should be doing to try and make sure that the next 2 decades, if you like, we can be in a good position to benefit from the growing economy that we see in emerging markets and across the world generally. Now, I think that everyone knows about the last 30 years. We all know about the growth of China. We all know about the growth of the emerging markets. Those of you who are particularly exposed to the city, to the financial services, will have heard of the BRIC countries, Brazil, Russia, India and China. We hear less about Russia, actually, in the context of BRIC, but we all get the idea. We all get the idea that what had been a very Western-dominated global economy has now been slightly rebalanced to the extent that other economies in Asia and South America and other places have emerged and are growing at a faster rate than the traditional economies in Britain and across the West. Now, in terms of figures, one figure I think illustrates this very well. In 1980, according to the IMF, G7, the current G7, produced 56% of the global economy, and the emerging markets were 31%. By 2018, those figures will have flipped, essentially. So G7 will be on 35%, and the emerging markets will contribute 54%. Since 1980, as I said, Chinese incomes, it has been estimated, have increased by a multiple of 40. So from around $250 a year to $10,000 a year now. And that is including inflation. So if you were to strip that out, you might get a multiple of 20. I don't know, but that gives you a scale, a sense of the scale of what's happened. Now, and I remember reading a book about 8 years ago which put this very, very simply. What has essentially happened, and this man was talking in the context of America, was that what the American steel worker earned was about the equivalent of $30,000 a year. The Chinese equivalent was earning $3,000 a year. So you can see there was an imbalance, which over time would be redressed. So inevitably, if you like, the Chinese average incomes would go up. And the challenge that the West faced was that the average worker, the average earnings of the worker might go down. So what can we do to alleviate this? Now I want to talk about particularly the British nature of the problem. We've got an economy in which debt was far too prevalent. And it still is. I mean, according to McKinsey, our combined private and public debt is about 450% of GDP. And this makes us the second most indebted country in the world, only to Japan. So what that means is that our public debt, our household debt, our company debt, all the debt aggregated together is the second highest as a proportion of GDP in the world. I think there's also too much regulation from a free enterprise point of view. I think businesses spend something like £100 billion a year on compliance with employment regulation, and that's increased about 6 times in nominal terms over the last 30 years. So there's a huge burden, not only of debt, but of regulation. And the last thing, I think, which I think is probably the most important in terms of kick-starting the economy, is our planning system is not delivering enough cheap capacity. And you can see that across a wide range of fields. I mean, the cheap capacity in transport, you know, we've been worrying about how to expand our aviation capacity for a long time. Energy, those of you who followed the political debate at the end of last year would appreciate how important energy is. And of course, housing, where we see huge increases in the prices of housing. We see increase in rents. I read a statistic, I think it was something like the average person is about 36 or 37 before they buy their own, their first home. So in terms of capacity, you can see it right across the economy in terms of housing, energy and transport. We do have problems. And also, just to throw it into the mix, I don't want to be too gloomy or pessimistic, but there's one thing as well. We have to worry about productivity. According to the ONS, in 2012, I know it's a bit out of date, but in 2012, UK output was 16% per hour below the average for major industrialized economies. And that was a very large gap. That was, in fact, the largest gap since 1994. The total hours worked is now largely at pre-crisis levels in terms of the amount of the numbers of hours, but the productivity hasn't really recovered. And if we look at our most productive industries, which are traditionally the financial services and more recently North Sea oil, those were the areas where we were particularly productive. Those have been quite hard hit by the financial crisis. That's the negative side. On the positive side, I think we've got a number of very key strengths. Firstly, we have an increasing population, which traditionally, if you look at the last 200 years, most economic growth has been driven, or a lot of economic growth has been driven by vast population increases. I mean, you don't need an O-level in economic history to appreciate that. I mean, you look at America in the 19th century, you look at the Industrial Revolution, you will see that industrialization happened and economic growth happened, sustained or driven by a vast increase in population. And our increase in population won't be vast, I'm not suggesting that, but the demographic problems that a country like Japan faces with its aging population is not something that we face in Britain. And actually, I think one of the things that we've learnt, certainly in the last 4 years with this coalition government, is that the electorate, I think, is ready to accept some pretty tough decisions. At the beginning of the Parliament, I was worried that some of our welfare proposals might lead to popular unrest and difficulties, but we were pushing at an open door. They were very popular, the welfare reform programme. If you look at the polls, the one area in which the government is performing very well is the economy, and largely, I think people have accepted the need for what we've described as the austerity programme. Now, there's a big discussion about to what extent this was austerity, and some people would have probably liked to see more aggressive spending cuts across the whole range of the budget. But I think in terms of the public debate between austerity and Plan B, I think the Plan B advocates are remarkably silent. In fact, it's been about a year since I've heard anyone talk about Plan B. They now talk about the cost of living. So I think that's an indication that the austerity line, if you like, the idea more broadly that we were spending too much before the crisis and we've got to somehow rein in spending, I think that's one that's accepted quite widely among the population. And I think things like pension age increases, we've announced those, but they've been they haven't been debated at all. I mean, people seem to accept or have a kind of stoical understanding that this is the kind of thing that we need to do. And I found this, particularly talking to German politicians, I mean, they have even more of a kind of hair shirt approach to life. And one German politician said to me, he said, we increased the pension age. People hate it, but at the back of their minds, they understand why it's necessary. There's a kind of a reality check where people understand that they will have to work a bit longer. So I think the population is ready to accept some quite fundamental changes. And the challenge is really, I think, amongst the political leaders, the political class, if you like, to try and come up with solutions. And more broadly, I just wanted to say, in terms of meeting the challenges, so just to sum up, I mean, the challenge is we've got issues regarding productivity. We are being potentially outpriced by cheaper labour across, from other parts of the world. And we have an issue with our own infrastructure. And I think all these problems can be solved. With regard to productivity, I think we need to have a more rigorous approach to education, which has obviously been one of the flagship policies, areas of development for the government. Standards across sort of examinations, public standards, free schools. This has been very much part of the government agenda, and I think we'll see improved standards. I think with regard to that differential between the cost of labour in Shanghai, for example, and the cost of labour in London, I think we're almost at the end of that process in the sense that Chinese incomes have increased a lot. And also those sorts of gains aren't going to be sustainable for the emerging world. As they get richer, they're not simply going to be able to just build new factories because, of course, their labour costs are getting higher. So the next stage of growth, I think, will be more challenging for the emerging world. It's much easier to build a factory than to compete with Apple or Facebook, just to put that very broadly. And in terms of the knowledge economy, obviously that links to education. And I think, this is from a free enterprise point of view, I think we have to be very rigorous and unsentimental, actually, about the way in which our economy can succeed. I think we've got to have low taxation rates. I think we've got to be able to attract people and attract capital to our country. And of course, income tax is a part of that. Corporation taxes, which I think has been one of the great successes of this government. I mean, successively lowering that corporate tax rate from about 20, I think it was 28%, and we're getting it down to 20%. I think that's been a great success. And of course, we need regulatory reform. The bigger picture, which I'll leave on, and this is where I will sound a note of caution, is I still think, and call me, I'm old-fashioned about this, but I still think that the public spending situation, in terms of deficit financing, is one of critical importance. I know that we're seeing growth this year, but we have to remember that the deficit this year, from a conservative estimate, I think is still about £100 billion a year this year. It started when I first got elected 4 years ago, nearly 4 years ago now. We had a deficit of 160 billion. And it's come down successively to the point where we're on about 100 billion, give or take. It depends what you include. But clearly, borrowing £100 billion a year is not sustainable. It's not a recipe for economic success. And at some point, we're going to have to, I think, bite the bullet on spending. So, I actually was looking through economic history and all the rest of it, and looking at the past. And it's very difficult to see how a country can sustainably grow with such large deficits. I mean, one of the problems that Japan has is that it's got this burden of debt and this deficit, which is dragging its growth rate down, on top of the demographic. I mean, they're linked, obviously, the demographic pressures. And if you look at when we grew in the 19th century, and if you look at American growth, yes, it is true we'd spend a lot of money in the Napoleonic Wars and all of that, but essentially the 19th century was one of balanced budgets and fiscal rectitude, similarly in America. So it's difficult for me, as a sort of free marketeer, to see a world in which we can grow significantly, given the levels of public debt. And I think that's still a major problem. But for the reasons I've said, and also we've got London, where we happen to be at the moment, London is a huge success story. And the fact that people have confidence in London, I think, is demonstrated by the property market. So I've been to Egypt and all around the Gulf. People see London as a safe haven. And these are shrewd investors. They wouldn't be investing in London if they thought that UK PLC was going to go bankrupt. So there's still that faith in our economy in this great city. So just to wrap up, I think that there are challenges, but the right policies and the right frame of mind will be able to deal with them. So I look forward to your questions. I'm sorry I've gone on a bit too long, but I just wanted to present very simply what I thought the problems were and what the challenges were and what some of the answers to those problems might look like. Thank you very much.
Thanks, Quasi, and thanks, Ruth, and the policy exchange. Hello, everybody. I'm going to build a little bit on what Quasi has said, but take a slightly different tact. I think the challenges facing the UK economy are well documented. The issues around structural debt, as we've been talking about, the issues of huge amounts of personal and household debt, lower productivity, aging population, and imbalanced economy in many ways. But I think there are lots of opportunities when the UK looks at some of the strengths that it's got, and it looks at how it can exploit those strengths in terms of some of the trends that are taking place globally. So for the purpose of this discussion, I'm going to look at some key consumer trends and some key consumer changes which are taking place, not just in the UK, but around the world, and how the UK can look to take advantage of those. I'm going to use a framework which one of our companies called the Future Companies have developed, and they've identified, when they look forward, around 6 sort of key global consumer trends, or what they call global consumer faces. And that is that people will become more urban, okay? Not just more urban as in urbanization will continue to increase, but in the way people think, the way they value systems, the way they buy products, etc. So you think about the concept of as populations become more urbanized, how that drives a different type of economy. They'll become more female, okay? And it doesn't just mean there'll be more women. It means that the way, again, that society works, women will have a greater impact on society, on our values, on the way we think about the world. The world will become older. Okay, across the piece, the world is becoming older, and that has implications, again, on the economy and some of the things that drive it. The world will become more connected, okay, in the way we connect with each other, okay. It'll become more aware and more activist. Consumers are becoming more aware about what's going on in their world, and they're becoming more active about that impact. And with that, they are asking, finally, to have more personalized solutions, things that are important for them. So think about those sort of 6 trends, and I'll talk about, I think, a couple of them. I'll just pick out a couple of them, which I think have an implication for the UK. Let's first of all talk about population and about urbanization. And actually, Quasi just mentioned how population growth remains a very important element for the UK. And we will continue to see strong population growth around the world. We're expecting probably about another 500 million people on the planet by 2020, another billion by 2030. So only 14 years away, another billion people. Most of those people will live in cities in Africa and in Asia. Okay, and that's a significant change. Now, we continue to see population growth in the UK, but what that does is it starts to drive a real market, a huge market for what we would call city-based sort of services or city-level type services. So you just think about things such as urban planning, infrastructure development, smart technologies to drive cities. Brian from Siemens is one of those businesses that are involved in those areas. The distribution of goods and services in an urban environment, the growth of e-commerce. All of these are significant industries which are particularly well geared to support the growth of urban environments. The UK has real strengths in those sort of industries, real capability, real expertise in those industries. In fact, the UK Technology Board recently set up a forum called the Future Cities Catapult, which is about galvanizing investment in the UK to take advantage of this growth which is going to happen outside of the UK. And many people will be aware of how a number of UK industries over the past few years, whether it be the financial services industry or whether it be our media and creative industries, have grown significantly in the UK on the basis of them fundamentally servicing businesses outside of the UK. And again, this is another area where I think we can get really strong growth. Our expertise in this area is an area we can have a new growth engine, a new growth industry for the UK. Equally so, we should see very strong growth in UK cities as we need to continue to invest in infrastructure, in housing, in services, etc. Crossrail's been a good example here in London. So those are all good boosts for growth. When you think about older consumers and you think about the impact that has, there are some challenges around that. So in the UK, we understand the consequence of an aging population, and particularly around the rising cost of caring for the elderly, whether that be in pension costs or whether that be in medical costs. But again, when you look on the enterprise side and you look at businesses in the UK, a number of UK businesses are very well positioned to take advantage of an aging population globally. So again, if you're in the financial services industry, if you're in the insurance industry, these are industries which are geared up around supporting older consumers in many ways. So as consumers around the world get richer and older, they become more focused on what they invest in, they become more focused on pension planning, they become more sophisticated investors, they become more focused on insurance products. These are products, again, which the UK has a significant strength on and a competitive advantage globally. And one of the key things for the UK is to make sure that where it has global competitiveness, it exploits those areas of global competitiveness. So that's one area. Clearly, another area is pharmaceuticals, healthcare, etc. Again, a real strength of the UK economy. An aging population will have huge demands on both healthcare and pharma products going forward. So again, 2 industries where we have strength today in the UK and where we really need to make sure that we continue to drive and exploit that strength to take advantage of a global, sort of a global consumer trend. And when you think about richer consumers, and many people would have seen this, there's been a huge growth in probably in the last 20 years around an emerging global middle class. Probably with that, and in some ways more worrying about that, has been the growth of quite a large, rich elite around the world. And when I say concerning really from a social cohesion point of view. And in fact, it was a major topic in Davos recently about inequality. There's some very interesting stats around how a lot of the wealth creation in the past 20 years has gone to a very small proportion of the population. There's a very interesting number which has come out of the US. For those who follow economics, there's a measure called the Gini coefficient, which measures the income distribution between the wealthiest people in society and the poorest people in society. 25 years ago, 30 years ago, Brazil had the worst Gini coefficient in the world in terms of the number of people who were rich versus the number of people who were poor. Today, the USA has a worse Gini coefficient than Brazil, which is quite a remarkable change in a country which has continued to grow very quickly. Another very interesting, quite anecdotal stat was in terms of some of this rebalancing that's taking place, there's been something like 475 hotels in China which have asked for their star rating to be downgraded from 5 stars to 4 stars. And the reason they've asked for this is because the Communist Party has instituted a new austerity measure which allows less exuberant parties compared to previous years, and the hotels are missing out on good business, and they need to downgrade their star rating to achieve that. Having said that, despite whatever your view is around the rebalancing the income distribution or the income inequality issue, the reality is that there's been a huge growth in sort of the demand for sort of luxury consumer high-end goods, and we see that particularly in cities like London as you get wealthy foreign buyers buying products. Again, the UK has real strengths around that. The luxury goods sector in the UK has benefited greatly over the past 10 years, and there's nothing to suggest that will slow down anyway soon over the next coming years. So whether it be from Burberry to Bentley, there's huge opportunities for that part of the sector to grow again. And it is in these areas of high-end production, of design, of innovation, and the strength of brand UK that there are opportunities for growth. And then finally, there are a couple of other sort of, I think, key drivers which are going to help drive growth in the UK. There's something around, I think I've mentioned around smart infrastructure. There's something around a new growing innovation around what's called manufacturing on demand. So many of you would have been reading about things like 3D printing, around customized manufacturing, around high-tech fabrication. Again, these are areas about consumers really looking for personalized mass production, the ability to say, I want something like that, but I want to change a little bit. And again, the UK has specific and real competitive advantages in all these areas. And finally, and Quasi mentioned this as well, there's a significant energy transition which will probably take place in the UK over the next 10 years as we look to really find new energy sources, whether it be through shale gas, whether it be through renewables, whether it be through a resurgence around nuclear power as well. All of these are critical areas which will act as stimulants for growth. So hopefully what I've outlined is just some trends and some examples. So there's some broad consumer trends, things which are fundamental to the way we as people live around the world. These are trends which, if we in the UK take advantage of those and we leverage the strengths that we have, those strengths being in our knowledge base, whether it be in the strength of our design, our innovation, the IP that we own, some of Brand UK, those are areas which we can then use to continue to grow our existing industries and some of our strength and our service-based economies, and also continue to grow new industries coming out of that. Will that solve all the problems around structural debt and some of the other fundamental challenges we face? Possibly not, but these are real opportunities for us to grow and for something to be very positive about.
So, good afternoon. So, I'm Brian Holliday, and I hope to share with you just over the next few minutes a slightly more industrial perspective on the global growth topic. I work for Siemens, a company that you'll be aware, of course, is globally active in 169 countries with 400,000 people and an order book in excess of 100 billion euros. So that's the corporate bit. But locally, here in the UK, we've been present for 170 years. A funky fact for you is that we actually commenced commercial operations here 12 months in advance of Werner von Siemens, the older German brother. So we like to think of Siemens as being a little British started enterprise. So we're here in the UK as a manufacturer and a supplier of technology to manufacturing globally. And my perspective comes to you working very much in both. So I've travelled this morning from Manchester, and I can tell you that in the northwest we're manufacturing variable speed drives, technology that will reduce energy used through electric motors in industry to the global market. Indeed, 98% of what we make is made for export out of this small factory in Congleton, employing around 400 people. Wider than that, here in the UK, we're making superconducting magnets for healthcare applications for imaging in Oxford, formerly known as Oxford Magnet Technology. And in Lincoln, we're making gas turbines for, again, the global market for power generation. So we see the UK very much as one of a number of global locations where we can make things. And of course, that means that there are competitive demands on what we do here. We have to be every bit as competitive here as other locations where internally we compete for finance. I agree too that there are some global growth trends, observable trends that actually drive our company, the way that we set it up, the way that we acquire organisations, although a slightly different in my case. Demographic change is clear, urbanisation, globalisation, or connectedness, as I think we heard this described by the previous speaker, and environmental change as well. So demographic change is clear, global growth in population and age, so life expectancy increasing from 46 in 1950 to 72 in 2025. We're getting older, as we've heard, the population is getting bigger. We're living in cities, so since 2007, more people live in cities than in rural areas, and this is clear. Environmental change I'll touch on because whether you believe it's human impact on the environment or not, certainly we need to respond, and of course there is much effort being put in globally into renewables and rebalancing actually of energy. And globalisation, I'm not convinced that actually there's anything new going on. We're able to observe, for me, constant shifts in capital, labour and goods movements around the world. But I'd agree too with the observation that there's been a bit of a global rebalancing through the liberalisation of emerging economies. And I've seen this personally, having spent an extended period of time just recently in China and Vietnam, and see the wealth of the population compared just with 10 years or so ago. And in 2012, there's 2/3 of urban households in China are middle class, and by 2022, it's estimated that 3/4 of them will be. That's 630 million people, or 45% of the population, with equivalent or parity purchasing power. I've seen too that, yes, we've seen growth in the BRIC economies, and I've listened with great interest to Jim O'Neill's series on Radio 4, which I can recommend, looking at the next wave of emerging economies, the MINTs, Mexico, Indonesia, Nigeria and Turkey. And having recently picked up responsibility in our organisation for Nigeria, I've been very interested in the growth opportunities for us there. So we can see that growth is... there's a consensus around global growth. The opportunity for me here in the UK is clear, that a large part of the answer for us, yes, there are challenges, but the opportunities are for exports, for manufactured goods. And I say that because, of course, although it's has been a declining part of our economy and still today only represents 10%, I can see the potential to do so much more. At the moment, it's 2.6 million people, 139 billion of gross value added. But of course, there's scope to do more, and I think this has come into sharp relief since the downturn. Exports, of course, can be driven on the back of increased manufacturing capability here. And of course, we're seeing a number of benefits from this in terms of employment, in terms of increased R&D spend. And I think despite the political uncertainty of the moment, a Scottish referendum, an EU debate, confidence remains remarkably good in the economy, and thankfully this is now showing in various business surveys to be picking up. We've seen sector strengths in the UK as well. They're exporting globally. The obvious ones are automotive and aerospace. But they do stand alone at the moment. There is a need to invest more in other parts of our economy. And when I was at the 2010 Advanced Manufacturing Growth Review launched by the present government, I was interested to see the focus put in on high-value manufactured goods. But I personally believe there's much more that we can do right across the piece if we invest in our manufacturing base. So where do we look for the opportunity, given that, as John Cridland pointed out at the CBI conference this year, British manufacturers have arguably squandered a 20% devaluation in sterling. We haven't actually gone out and embraced the opportunity for growth, given this uptick in demand around the world. So there's no question that the BRICS have dramatically grown, and we've seen this. Mints perhaps are coming next. But I would put to you that I wonder if we've underexploited the European Union, the European Free Trade Agreement, as an exploitable market. There's a market of 500 million people, and a market where if you put EU and or the combined European Free Trade Agreement area together, it represents 50% of our present exports. and yet it's so very low down our political agenda. I recently had the opportunity, in fact the week before last, to go with 25 other directors with the CBI to the European Parliament. And I think it's fair to say the consensus was that we were shocked at how ill-informed we were about the work of the European Union and the size of the opportunity to us. And what struck me in particular was not just the single market, but also what the EU could do for us if we were to embrace the opportunity, not least of which is trade agreements on our behalf, like TTIP with the US, which means that for a company like ours, not having to put so much effort into standardization and the regulation burdens could actually free up a lot of people to be put to other productive uses. I know that there's a cost issue, but for me, if you look at that 116 euros per person it's estimated to cost, actually I think that's pretty good value. So what about our ability to capitalise? Well, the government have been doing some work, in fact, for Sir Mark Walport, the chair of the Foresight report, looking at what we could do in manufacturing. And I'm really pleased that this has become a cross-party supported initiative looking at a 35-year industrial strategy. I've been very pleased to see that they recognise that manufacturing matters as part of the answer. Of course, it can't be the whole answer at 10% of the economy, that it's changing, and that gives a scope for opportunity in mass customised goods to meet the personalisation trend that we're seeing, and in additive manufacturing. We've got real UK strengths. And we need policy instruments. We've got an underinvestment in skills and indeed in manufacturing technologies itself. And this has been our ongoing Achilles heel, the make, do and mend mentality that we need to address. And I think government actually are doing a pretty good job here. I read with interest the 8 Great Technologies piece that was authored, I think, by, well, co-authored with Policy Exchange and David Willits, looking at potential strengths for the UK. And I've seen some really practical effort going into creating the 7 major high-value manufacturing catapults centres, which I think will really help us commercialise this UK research strength. But we've got an under-deployment of basic technology, plant and equipment as well, that would help our productivity, which we know to be an issue. So automation technology in particular, which is highly exploited, for example, in Germany, which is often held up as a comparable model. And we can see an economy there of about $3.6 trillion, ahead of ours of around 2.4, and yet an automation consumption that is in excess of 10 times that of ours here in the UK, leading, in my view, to a much higher, a much more productive manufacturing. So in the longer term, yes, productivity is key, and I've been pleased to see the work going into, for example, Industry 4.0, of a sense of what manufacturing technology will look like and could deliver in productivity terms in the longer term future in 20 years' time. So I'll summarise and leave space for questions to say that my view is that the UK is a great place to research things, to make things, and to be a springboard into Europe. And I hope we get into more of this in the debate. We do have to invest in our people, innovation and infrastructure, and this has to be ongoing and sustained. But I suspect at the moment we're probably undervaluing the role of manufacturing, the EU as a trading partner, and brand Britain when it comes to addressing the global growth opportunities at the moment. Thank you.
Good afternoon, everybody. My name is Andrew Sentence. I'm a business economist currently working for PwC. Spent 5 years on the Bank of England's Monetary Policy Committee at a very interesting time. Challenge or opportunity for the UK, the global economy? I think any answer to that question must be there's elements of both. But I think I'd probably like to stress the opportunities in my contribution here today. I want to make 4 brief points. The first point is that the global economy is expanding, and global growth provides opportunities for the UK in a number of different ways. If we look at the size of the global economy in dollar terms, if you go back to the mid-1990s, when I first looked at this when I was at London Business School teaching MBA students about the global economy, then the total size of the global economy as estimated by the IMF or the World Bank was about $25 trillion. This year it's going to be about $75 trillion. In the space of about 20 years, the global economy has expanded 3 times in current money values. This is not, as you might get the impression from the Western financial press, a global economy that is contracting or in danger of going into some negative trend. It's a global economy that actually bounced back remarkably quickly from the financial crisis, and world GDP is about 20% above where we were in 2008 in dollar terms. And it's good for the UK in a number of ways. First of all, the UK is a very international economy. We have very strong trade, financial, business and confidence linkages with the global economy. And you can see this if you just put a chart of global economic growth and UK economic growth. They move very closely together in the short term. And one of the reasons the UK economy is picking up this year and picked up towards the end of last year was the global economy was in general improving. Secondly, we have a particular emphasis in our economy relative to other major Western economies on exports of services. Exports of services account for 12% of UK GDP. Our counterparts in continental Europe, Germany, France and Italy, that figure is around about 6% of GDP. For the United States, it's about 4% of GDP. We stand out in the G7 as being the leading exporter of services. And it's not just financial services, it's a whole range of services. I work for PwC, which is in the business and professional services activity. That's one of the biggest export activities that the UK has to the rest of the world. And you can think of others like education, creative media, and so on. And the final reason I would say that global economy is good for the UK is that I believe in the theory of comparative advantage, that as you open up to trading opportunities, this is one of the longest standing and most durable theories in economics, originally coined by David Ricardo about 200 years ago, that what access to the global economy does enables the whole economy to benefit because we benefit from focusing on those things that we are best at. Now, this is sometimes misunderstood because it sometimes is led to mean, oh, well, everybody benefits and every sector will benefit. There will clearly, the whole idea of comparative advantage is that there's a process of structural change. You focus on the things that you're relatively better at, and some things that you're not so good at, those activities may decline. So we have to accept that as part and parcel of benefiting from participation in the global economy, there will continually be structural change taking place in our economy, and some activities will be declining. But we've got to create a business climate such that other activities can flourish and grow at the same time. So a positive picture of the global economy, positive for the UK, but we are in a period, as Quasi reminded us, of disappointing growth for the Western economies as a whole, and the UK is not exempt from that. And this is a prolonged period that was ushered in by the financial crisis, but doesn't just reflect the stresses and strains of the financial crisis. It also reflects the challenge of adjusting to a world not, I wouldn't say, just dominated by emerging market economies, but where the Asia-Pacific region and the big economies in that region, particularly China, India, Indonesia, you can think of others, are becoming the dominant, or only have become the dominant area and region in the world economy. A third of world GDP is now accounted for by the Asia-Pacific region. That compares with just over 20% for the United States and about 25% for the European Union. So it's already the biggest single region of the world economy. And it's that shift in economic power towards the Asia-Pacific that's driving this emerging market phenomenon. 60% or so of the world's population live in the Asia-Pacific region. So unless there's a very big accident in that region economically or politically, we're going to see a continuing growth in its importance relative to the world economy. And so the challenges for the West and for the UK are not just to do with getting over the financial crisis. They're adjusting to this new world. And as I say, that has to bring with it some structural change. And those structural changes are part of the reason that we're seeing slow growth, but they're not the only reason. We've lost tailwinds that were boosting our growth before the financial crisis, which I classify as easy money, a world of cheap imports as China and low-cost producers came into the world economy, and a sort of excessive confidence in the ability of governments and central banks to stabilize economies. And also, as the economies of the West become richer and more service-orientated, productivity growth is inevitably going to slow down. You cannot achieve the same rates of productivity growth at higher levels of standard of living in a more service-orientated economy as you could in years gone by. And I think that is perhaps not recognized enough in the debate that we have. So the West is in a slow growth phase, and I think it will take time to move out of that. But I would take some encouragement from what happened in the early 1980s. The UK and the United States were two of the first economies that led the West out of the slow growth phase that we inherited from the 1970s. And some of the transformations that we need to look to in our economy on the supply side, I think, need to be updated versions of the types of approaches we took then. So the third point I would make is relative to other Western economies, I see the UK has a number of strengths and advantages in this world that we now occupy. We have a flexible labour market. Relative to other economies in our region, in the European Union, we have a generally business-friendly economic climate. As Quasi reminded us, we have London as an international gateway into the UK. Surveys of major global cities come up with two at the top of the list normally, London and New York. Well, you'd expect the United States, which is the world's biggest single national economy, to have a major global city. The UK only has 3% of the world's GDP and less than 1% of the world's population, yet we have one of the top two global cities. And one of the things we haven't really come to terms with in our national economic policy is making the most of that opportunity and making sure that the benefits do spread out through the rest of the country and that we don't have this continual north-south divide debate where people elsewhere in the country argue that they're disadvantaged. Finally, the UK is making progress in the adjustment post-crisis. We're not through it, but I think over time we will make the adjustment in the financial sector, the public sector, and in business. But we can do better. And as Quasi argued, we do need to have more supply-side reform, particularly regulatory and tax reform. And in this respect, I would just sort of espouse the bicycle theory of economic policy, that if you're not consistently moving forward in one direction, in the right direction, you're going to fall off. So the fact that we have a relatively flexible economy compared with the rest of Europe doesn't mean that we can rest on our laurels. We should be continuing to explore new ways of making our economy more flexible and competitive. So my conclusion, my fourth point, there's no alternative, I think, to embracing the global economy. And in the debate that we have about it, I think there is a false dichotomy, as the previous speaker commented, that somehow it's seen as an alternative between getting involved with our nearby economies in Europe or getting involved with the more dynamic economies in the Asia-Pacific region and the rest of the emerging market. These are not alternatives. If we're going to make a major new trade relationship with China, with other parts of the world, with the United States, the European Union is a natural vehicle to do that. And the final sort of note on which I would close is that in the 1990s, in the early 1990s, we made progress out of that recession by embracing within Europe the single European market and more broadly the culmination of the Uruguay round, a new free trade agreement with in the world economy and the launch of the World Trade Organization. I think one of the things that can really kickstart the world economy in the UK is another round of opening up trade, particularly in services, but also in manufacturers, both globally and remedying some of the perhaps problems in the European Union so it operates as a more effective single market. So both challenge and opportunity, but I've always been a glasses half full person and I think a lot of opportunities for the UK. And obviously you can read more about this in my book, Rediscovering Growth After the Crisis. Thanks very much.
Thank you, everyone. We've got a little bit of time to take some questions. We do have a microphone, so if you can wait till that gets to you, that would be great. And if you can say your name and where you're from as well. If we take them maybe in pairs, so does anyone want to kick off? Yeah, this gentleman over there.
Hi, Charles Fletcher from ADS. We're the trade association for the aerospace, defence, security and space industries. We are running with the government the aerospace and defence growth partnerships, and some of the stuff's been picked up on today regarding 3D printing, for example. Last year we had £2 billion of joint government and industry funding that went into the Aerospace Technology Institute, and about 30 million of that last couple of weeks ago went into 3D printing, or announced there was going to be a new 3D printing centre in Coventry. So it's a classic example of government and industry working together to push the future of the manufacturing industries. But the question really was with regards to, in our submission to the government on the budget coming up, we raised the fact that business investment is still about 26% below pre-recession levels. So we're calling on the government to really to ask them what they can do to encourage business investment in R&D in the short term, such as looking at R&D tax credits and how we can bring it up to the EU level of 25%, where we currently stand about 10% of above the line tax credits. And I'd be interested to hear what the panel think the government could do more to open up business investment.
Thank you. Can I take that question and actually broaden it out? So not just on R&D, but on investment more generally. I know that did get brought up. What are the kind of conditions that you think we need to be pushing in order to get more investment? And how big of an issue do you think lack of investment is at the moment in terms of things like productivity as well? Should we maybe start at the end and work our way along?
Yeah, I think investment is always important, but I think we have to recognise that the investment world we're now dealing with is much more complex, perhaps, than it was sort of 20 or 30 years ago. There's because the Office for National Statistics measures something called fixed capital formation, which is basically machines and property and stuff like that. There's a tendency to regard that as the main element of investment. Yet work by Jonathan Haskell at the Imperial Business School has shown that intangible investment, you mentioned R&D, which is part of the intangibles, things like human capital, those intangible investments are now worth more to the UK economy than fixed capital investment. So that means that investment is a much broader picture than just machines. And I think we need to focus on those sort of investments that are going to be of most value to businesses in the sort of competitive marketplace. So if you talk about fixed capital investment, mainly machines and property, I'm not sure incentivising that through the tax system is necessarily what we need to do. Perhaps more targeted things like we're doing with the patent box. Yes, some forms of R&D, but we have to remember that when you incentivise something in the tax system, that means the tax rate has to be somewhere, tax has to be higher somewhere else to compensate, at least in the short term. And so I would be in favour of trying to make those sort of exemptions or incentivisations as narrow and specific and targeted as possible, and also focus on these intangible investments that are becoming increasingly important in the modern economy versus fixed investment.
I think there's actually a tremendous amount the government are doing right now, and our own surveys have shown that there's little awareness. Awareness is one of the key problems. Certainly corporation tax rates have been welcomed. Patent box, you've mentioned R&D tax credits are actually the take-up is pretty good. But the government are doing a lot behind that as well in terms of manufacturing advisory service, the Catapults Technology Strategy Board. There's quite a lot of emphasis going on shared investment models for research that sits outside of plant and equipment investment as a category. But awareness levels are pretty low, just 34% on average across those support schemes. I do support positive policy instruments to try and address what, for me, is the typical British behaviour of make, do and mend, of actually without a positive instrument, we will try and, in terms of infrastructure or manufacturing and machines, plant and equipment, we'll underinvest and try and keep going with machines where we're not seeing the benefit, or we're not investing for the benefit of the productivity increase we could see. So I'd like to see not just the enhanced capital allowances continue to be used as an instrument. I know they've been uplifted to 250,000 this year, but I'd like to see write-off periods addressed as well, so that we've got parity with Germany, the US, with other regions, meaning that you can recover the cost of investments quicker through the tax system as well. And we'll know we've got that right when finance directors see it as the no-brainer to go ahead and try and find ways to invest in productivity here in the UK.
I'd agree with both those points, and I think it's a tough decision for government because they're cutting on one area, you've got to invest in another, so it's a particularly tough environment. Just one additional point I would say is that I do think we also need to look at investment in other ways outside of government. I think if you look at the US and the amount of money that is raised through the collaboration between educational institutions, between the universities and private enterprise is significant. So you just need to look at the size of the funds that exist at universities like Harvard, Yale, Stanford, etc. They've generated enormous amounts of money for R&D, and there's a real role for us to think about the way government can support that, but a real role for both private enterprise and the universities to work more closely together. You just need to go spend a couple of weeks in Silicon Valley just to understand this unique environment that's been built there between education institutions, between private VC capital money, between entrepreneurs who are creating these huge industries that we are seeing, that we see every day in our lives. And somewhere along the line, the US has done a remarkable job of fostering that environment. And we need to look at some of those examples and try and bring them back to the UK and make sure that we take these world-class institutions that we've got here in Cambridge and Oxford and in London, etc., and continue to drive those to generate more funds. I think there's other ways outside of government investing being able to get on some of these high-tech industries.
I just wanted to say, you're in the aerospace industry. We always get in Parliament, people from industries, specific industries saying, why don't you increase capital allowances? Why don't you increase R&D tax breaks? And we've done that. We've tinkered around with it. When we came in, the allowance was 250,000 capital allowance, what we referred to. We cut it to 25,000, and then we put it back up to 250,000. I tend to be quite skeptical about that sort of tinkering. I think it did improve things by moving it up from 25 to 250,000. But what I would like to do is see much lower corporation tax rates. I'd like to see a sort of 15% corporation tax rate, possibly even lower if we could. And I think that it's a very cute game to get into various different types of capital allowances and what you can do. But I think the easier and simpler approach is just to try and get corporation tax levels down. And I wanted to agree with, I do agree with what Wayne said about universities and private enterprise. But of course, the way in which places like Harvard and Stanford are funded are completely different to the way in which we've funded our university sector since the war. All these institutions that you mentioned are private institutions. They have huge capital, they have essentially hedge funds that run their endowment, and they run like businesses. So yes, it is true that we can adopt some of those practices, but we have to be, I think, even more innovative and radical about the way in which we approach perhaps the university sector to try and realize some of those achievements that they've seen in America.
Great. This gentleman here. Oh, if you just wait for the microphone. Thank you.
You just have one.
Couple of questions. One for Quasi Kwarteng. You spoke about the difficulties of values impairing our investment in energy, infrastructure, and housing. And of course, we all know what you're talking about. These are values, some of which are embodied in legislation going back 70 years or more. Do you think that it lies within government's power to address these values, or are these things we're just going to have to live with? And a question for Andrew Sentence. You said that you felt that it was hard to improve levels of productivity at this level of economic activity. Does that mean you discount the stuff that's been in the press of late about the improvements that might come our way through the use of computerization, software, what you will?
Sorry, did you say who you were? Sorry, I didn't at the beginning. Are you coming from a particular business or?
I'm from
it's
the
usually
Adam
quite
Smith,
useful.
Sorry,
to know.
Adam Smith Institute.
Oh, you're from the Adam Smith, so that context was useful to me.
Wasn't supposed to be a secret.
Good. Well, from the Adam Smith Institute point of view, I suppose, we could go further in liberalising a lot of the rules that have constrained planning, and I think there is a will on the government's part to do that. Clearly, the opposition are also suggesting that we should look at planning to deliver more housing stock. I was just raising it as a problem because I represent a constituency which is very near Heathrow. People in my constituency have been, really, we've been debating this issue seriously since 2003, when the government white paper on aviation appeared. And it looks as if we won't get a resolution to what we're going to do about aviation capacity until at least 2015. So that's 12 years of debate. And I think if we're serious about economic growth, we're going to have to accelerate some of those debates and some of those questions. Now, I'm not here to say what those answers are, but I think the process in which we kind of work out and deliver infrastructure probably needs to be slightly quicker if we're going to get the growth that we need. And that's infrastructures across, as I said, transport, housing, and energy.
Yeah, just on the productivity point, I don't want to come across as some sort of total productivity pessimist, sort of Larry Summers or something like that. But I think that you have to recognise that if you look back historically, productivity growth in manufacturing and goods-based activities has traditionally been higher than productivity growth in services-based activities, and there's various reasons for that. William Baumol analysed it back in the sort of 50s and 60s and coined Baumol's law, which is sort of embodies that. So as we shift our focus of our economy more towards services sector, it's going to be hard to buck that. But also as economies that grow from a sort of low standards of living, as the Chinese are doing and the Indians are doing, they have potential for getting quite rapid productivity growth, borrowing on, implementing ideas that have been developed elsewhere. The more you get up towards the productivity frontier or the cutting edge, you're more dependent on the ability of you and your peers in that area to sort of move forward. So both those factors, to me, point to the fact that we should perhaps over a period of time expect productivity growth to slow down, but not to disappear, because there's a countervailing force of new technologies coming along. But those new technologies have been emerging, through time in the past. So, I think for an economy like the UK, people talk about sort of 2.5% productivity growth. I think that's too optimistic. I think perhaps 1.5%. And actually, if we look at across the Western world, productivity growth has slowed quite considerably across all the Western economies since the mid-2000s. And I think some of that's temporary, to do with the shocks that we've had from the financial crisis and rising energy and commodity prices and so on. But I think not all of it's temporary, and maybe some secular slowdown as well.
Any other questions? Please, can people say their name and where they're from as well?
David Gardner from KPMG. Just a couple of the speakers, Quasi and Wayne, mentioned the importance of immigration. Of course, the only reason that the UK population continues to increase is not because of natural birth, because that's about 1.9, 1.95. It's because of immigration, which has been very good economically for the UK. And indeed, we have one of the highest skilled and educated immigrant populations of any OECD country. But as a business, we find it increasingly difficult, with increasingly more regulation and more cost, certainly in terms of non-EU migrants. And of course, some political parties are now talking about also ending the great bonus that was the single European labour market as well. And I'd just be interested in the panel's comments on how we can send out a real signal that the UK is open for business and welcomes talent from everywhere in the globe.
Can I just say a few words about it? I mean, I didn't mention immigration deliberately. And also, I think that I did mention population. I think the population growth is being driven not so much by immigration, but by the birth rates of the immigrants who are here. So the reason why we have a higher birth rate than Germany isn't because, birth rate's got nothing to do with people coming in as a flow. Now it's got to do with people who came in over 30 or 40 years ago, and those populations tend to have higher birth rates than the existing indigenous population, and that's why we don't face the demographic problems that Italy or Germany does. So it's slightly different, but you're right to say that attracting talent, human capital, is an important part of economic growth. I think there is a broad question about how you attract that capital, human capital, and how you regulate that. Because obviously, I mean, a total free marketeer would say we shouldn't have any restrictions. And the problem with that is that I think that would come with huge social cost. I think you'd find you could have 20 million people coming to Britain over 10 years if you had a totally open border policy. And that would have, you know, resultant strains. So yes, I think it's a difficult problem. And we've got to try and make immigration work for us. And you're right to suggest that it is a factor in terms of economic growth. Although I think that, you know, that we can be smarter about using point system, about the nature of the immigrants we have. And I don't think it's just merely a question of numbers.
I tend to agree. I think we're concerned, even from a global business point of view, about some of the rhetoric around immigration. We as a business are very reliant on talent from around the world, and we think it's very important in attracting the talent to the UK. And I think it needs to be managed very carefully. I think any message that goes out that says Britain's closed is a worry. I think one of the most concerning things has been the impact potentially on students coming to the UK. I think this is you just need to look at how important students who've studied in the UK have then stayed on in the UK and have continued to be an active part of the UK growth economy, and that's here and in other key parts of the world as well. So I think we do need to be careful about it. I think there is a how question, because there is a social issue, and there are models in Canada and Australia and markets like that which we can look at to see whether we can adopt some of those. But I think certainly from a business point of view, I mean, you know, more curbs on immigration would be a concern.
I can echo that and support Wayne's remarks that from a business perspective, free movement of labour is an increasing necessity for us, particularly in engineering and manufacturing, for which we have, although we've got an education base that exports around the world, we've typically been exporting engineers back overseas, and of course now we're finding that we're having to recruit them here in the UK from outside the EU as well. In fact, I've just taken on 2 Romanians last week, having had 50 candidates applying for roles in an engineering project business. So it's very real actually for me right now that we need access to skills, but at the same time I'd balance that by saying, well, we've got to get better at training people domestically to take up the jobs that we now so desperately need. And when the word gets out there that actually they're better paying now, they've got much better longer term prospects, and employers are crying out for people to come into engineering, I'd hope that those year 10 choices that parents and students make will help to start address this. But actually we are going to face a gap in the short term.
I think we're in danger of shooting ourselves in the foot a bit, because I talked about the importance of the services sector and services exports. Now, export of services is much more connected with the movement of people inward and outwards to a country. And I agree with Quasi about the need to manage the social implications, but I think it's a difference between people coming here on spec and people coming here to fill specified roles and to help develop specific industries. And some of the sort of areas that are being affected by this are quite strategic for the UK. Our education sector is actually quite an important strategic potential source of export revenue and development for manufacturing activities, etc. And if we're not careful, we're going to, the image we're creating in the rest of the world is that we're not open for business. So, I think the government's got to be really quite sensitive to that balance.
Are there any other questions? I think we've just got time for one more. Fine. We take these 2 together.
Luke Herbert, Head of UK Government Affairs at Jaguar Land Rover. Does the panel think that the UK recognises how far it has to go to be truly competitive with other global competitors for areas such as high-tech manufacturing, where we are having a comparative advantage? A metaphor we use is, say, just on skills, and we recognise the comments of Brian from Siemens, really, in terms of investment in innovation, in skills and infrastructure that needs to not just gradually evolve, but shift up to a whole different level to be competitive. But for skills, we're still in a situation at the moment where we're producing less than half the graduate engineers from UK universities that engineering companies and sectors are crying out for every year from now through to 2020. And there yet doesn't seem to really be a clear enough debate about quite how big that gap is and what things are needed to be done short, medium and long term to address it. So really interested to hear whether, as a panel, whether you think it's a yes or no, that the UK is got its eyes open enough to where we really stand in the global economy for our comparative advantage.
Robin Edwards, Trustee Policy Exchange. The British banks are going to be shrinking their balance sheets for another 5 years. How much is that going to impact on growth over that period? And secondly, we talk a lot about being well-positioned and good at exporting. So why, therefore, is it that we, to emerging markets, export 1/6 the amount that Germany does?
Start at the other end.
Right, well, in terms of the first question about do we recognise the challenge in manufacturing, I think there was far too much sort of glib talk about rebalancing towards manufacturing, as if somehow, because other sources of growth in the UK economy had gone away, that we could just turn manufacturing on like a tap. And all my experience of it is that you have to build up your manufacturing industry strategically over a long period of time. And there's sectors of manufacturing that the UK has basically exited, and it's very difficult, for us to re-enter. But the manufacturing that we have is, it's of good quality, highly productive, some strong sectors in engineering, pharmaceuticals, aerospace, and so on. But I think the key to building it up is, I think the point that was made by Wayne about the strategic partnership between education and the way our ideas are formed and business is a very important ingredient of how we sort of build up our manufacturing base. In terms of the UK's trade position, I'm not sure we're getting a sort of accurate picture of our trade position at the moment from the statistics, because services trade is very poorly measured in the short term, and it takes a while for the statistics to catch up. I think when we get the full picture, we'll realise we've been doing better in the services sectors than perhaps is currently shown by the figures. And if you look at some of the GDP estimates, that's sort of consistent with that, with business and professional services doing particularly well. I'll leave some of the other points for other people to pick up.
We certainly need some best practice examples, and for me at the moment, JLR, there's no question that you've got all the nice problems to try and address in terms of growth and skills and space, but actually what you've got is the perfect combination of high design, manufacturing capability, and demand for the product overseas, which I think partly impacts on the question about, well, why German products are so much more exported. And I think we are genuinely undervaluing the brand Britain overseas. I don't think, when you travel, you realise that we're more down on manufacturing and our ability here than other nation states are when they look back into us. So I think in answer to your question, there are pockets in government that get this, and I think if you look at the Department for Business Innovation and Skills, I think it's very, very high up the agenda. UKTI come out with, very highly on the list of awareness. Or if you talk to companies about awareness of schemes that are there to support them, I don't think it's right across government, and perhaps Andrew would argue that it shouldn't be because it's a smaller part of the economy than services. But I think we're getting there. I think on skills, finance, we've still got some way to go on releasing capital and finance for SMEs. It's not just about the primes, but the supply chain too. But broadly, from the manufacturing forums I've been in government, I think we're making good progress in seeing that big picture.
The only comment I'd make again is that I think JLR is a great example of a British business which is a combination of brand Britain. I think the branding and a lot of the value is around the IP and the sales and marketing as well. And we mustn't lose that. Sometimes manufacturing is one aspect of it, but there's also huge value being in design and manufacturing and the sales and marketing effort that's gone behind it. So I think that's an important element to keep in mind. And then just a warning as well, I think, for anyone is that we need to constantly invest from an education point of view in maths and science. If you just look at the amount of graduates coming out of emerging markets with engineering degrees, with maths degrees and science degrees, I think that creates one opportunity for us, but it creates a real threat. And if anyone ever has a view that a number of the emerging markets aren't innovating, you just need to go spend a little bit of time in China to understand that real innovation is starting to take place there at pace. And I think this is an ongoing global race. It's a constant backwards and forwards between between countries. And if we don't keep innovating, we don't keep focused on the things that we're strong in, we don't keep investing in those areas, we'll fall behind very quickly.
Just on the 2 points. I mean, your first point, the first point relating to manufacturing and whether we're cognizant of the problem that we face. I think there is a bit of a misunderstanding, actually. I think the depth of the problem in terms of our manufacturing, our skills base, is something which isn't that widely appreciated across the political class, or certainly across the electorate. I think you're right to suggest that one or two departments, like the Department of Biz, are into this, and they talk a lot about skills. But generally, I think you're right. I think that we could do more to highlight this fact that we are perhaps not where we should be in terms of our skill base. Although I would say that the education debate, even though it's a broader debate, it very much is conscious of some of the issues that you raise. Now, there's another question of what you do about it. I mean, one view is that we need more maths and science graduates. Another view, which I get in my constituency from manufacturers, is that apprenticeships were the big thing that we should be investing in. So it's not a question simply of having people with engineering PhDs. What we want is highly skilled apprentices. And those of you who know, certainly in Germany, and particularly Switzerland, which I know well, the number of people who leave university in Switzerland is actually quite a low proportion of the population. But people are very highly skilled at the high-end manufacturing that you talk about because of the apprentice system. The second point, I think you made a very, very good point about the bank's balance sheets. And this has always been a riddle to me, because I think, well, from the financial crisis, the very nature of a financial crisis is that you will have a bloated financial sector and bloated balance sheets. So across Europe, what we should be seeing over the next 5-10 years is a contraction of banks' balance sheets. And the extent to which that affects growth, I would have thought would be quite a drag on it. But on the contrary, I think in the last year, we've seen quite healthy growth, not just here, but also in parts of Europe. So that's always struck me as slightly odd. The worry, obviously, in Britain is that we're not actually going to contract our balance sheets as much as people anticipate. Insofar as a lot of the growth, and this is again is an open question, the suspicion is that some of the growth is our old friend, the credit bubble. There's a view, and I think there's a wide range of things, but clearly some form of asset appreciation driven by credit is a factor. I'm not sure what Andrew thinks about that, but is playing some role in some of the the good news that we hear. My view is that we're not going to get good growth without sorting out the debt problem, and it's not just a question of bank debt, but it's across the piece. As I said, we're the second highest indebted country if you add up all the elements of debt. And I think, to answer your question very broadly, I think that could well be a threat to sustainable growth in the medium to long term.
I'm conscious that we framed this debate today looking at kind of challenge and opportunity. But having listened to it, it's interesting how I think I'm struck that you could almost cut it another way and look at it in terms of policy and culture, because a lot of the issues seem to fall into those two categories. And I think that's probably a reflection of the fact that we've had people kind of representing business, politics, and economics on the panel. So it's been great to have people from such a diverse range of backgrounds. So if you'd like to join me in thanking our panellists in the usual way.